Hello and welcome to TalentSprint. We are going to discuss the various aspects of the Indian financial system, the Indian banking system, the various components of the same, and what is a bank and how does a bank operate, what are the various committees involved in banks, the history of Indian banking, and so on and so forth. So we now start by understanding what is a bank. Section 5B of the Banking Regulation Act of 1949 defines what is a bank or what is banking. The Banking Regulation Act of 1949 is the foremost legislation as far as banks in India are concerned, and all the banks till this day are bound by regulations governing the various aspects of banking as contained in the Banking Regulation Act of 1949. The year 1949 may seem a little dated when we talk of 2017, but all the provisions contained in the Banking Regulation Act of 1949 are still valid to this day, and they govern the way in which banks are to function. Banking, according to Section 5B of the Banking Regulation Act of 1949, means accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawal by check, draft or otherwise. There are various components to this. We'll have to understand those components. We have to say that it is for the accepting for the purpose of lending or investment or otherwise. For the purpose of lending or investment. This is the most important thing. A bank, what does it do is that it accepts deposits from public for the purpose of lending or investment or otherwise. That is the most important thing to understand. A bank is a financial institution which accepts money from the public in the form of deposits and lends it to various people in the form of loans and advances. That is the basic structure or the basic function of a bank as defined in the Banking Regulation Act of 1949, Section 5B, and that continues to hold good even today. So acceptance for the purpose of lending or investment of deposits of money from the public. And the next word, which is very important, is repayable on demand or otherwise. This is again a very important aspect of bank deposits, is that they are either repayable on demand, which is the savings bank and current account deposits, or otherwise, which means that they could be fixed deposits which mature at a given point of time. You could have a fixed deposit which matures in 6 months' time. You could have a fixed deposit which matures in a year's time, and so on and so forth. And more importantly, withdrawable by check, draft or otherwise. This is again a crucial aspect of banking. You can either withdraw your deposits by check. You can you can issue checks favoring a third party. For example, when we make utility payments, we make out a check favoring, let us say, the electricity board or the water supply board and so on. Or you could go to the bank or to the ATM and withdraw cash for your personal needs. Or you could also take out a demand draft. Supposing you are living in a city let's say for example you are living in Hyderabad and you want to make a payment to someone in Mumbai, you could actually make a payment through a draft. Of course, the days of taking out demand drafts are long gone, but I am just giving you an example that you could actually send money to people by demand draft or otherwise. That otherwise means that so many other forms of remittances have come since the days of the Banking Regulation Act. So this means that banking, as defined in the Act, a very simple definition says acceptance for the purpose of lending or investments, deposits of money from the public, repayable on demand or otherwise, and withdrawable by check, draft, order or otherwise. And any organization that does banking is a bank. Very simple definition. Any organization that does banking is a bank. So this is the first definition of banking that one can think of. And what is a bank? Is a bank is an organization which does banking. As simple as that. What are scheduled banks? Scheduled banks are those which are included in Schedule 2 of the Reserve Bank of India Act of 1934. Scheduled banks are those which includes only those banks which fulfill the criteria as laid down in Section 42(6) of the Reserve Bank of India Act of 1934. Not all banks are scheduled banks. Only those banks which are included in Schedule 2 of the Reserve Bank of India Act are called scheduled banks, and they have to comply with certain criteria as laid down in Section 42(6) of the RBI Act. The minimum capital requirement of a scheduled bank is 25 lakh rupees. Any scheduled bank to be included in the second schedule must have a minimum capital requirement. That means capital promoters have to invest an amount of a minimum of 25 lakhs in order to be called as a scheduled bank. Non-scheduled banks, by the very definition of the name, are those which are not included in the scheduled banks list. We have two categories of banks in India. One is the scheduled bank and the other is a non-scheduled bank. A scheduled bank is one which are included in Schedule 2 of the Reserve Bank of India Act of 1934. These banks have been included in the Schedule 2 because they laid down certain criteria as laid down in Section 42. They comply with certain criteria as laid down in Section 42(6) of the Reserve Bank of India Act. And the minimum capital requirement for them is 25 lakhs. And those banks which are not coming under this scheduled banks are called non-scheduled banks. Now we go to the next category of banks, which is called the public sector banks or the nationalized banks. Public sector banks, as the name indicates itself, are those banks which are in the public sector domain, are those in which the Government of India holds more than 51% of the share capital. A total of 19 banks were nationalized on the 19th of July 1969, and these banks, this was a major event in the history of banking in India. The date 19th July 1969 will remain forever in our memories, etched in our memories, because the date, it was that date in which the nationalization of public sector banks or the nationalization of banks took place. The first tranche of nationalization took place on the 19th of July 1969. That was the period when the finance minister felt that it was the right time to bring large commercial banks into the government fold in order to protect the interests of the depositors. And so a nationalization act was passed by which 19 commercial banks were nationalized. Including these 19 banks and 6 of the associate banks of 6 banks of the State Bank group, which included the State Bank of India and 5 associate banks, there were 27 public sector banks in India till very recently. Till the 31st of March 2017, there were 27 public sector banks in India, which comprised of 19 nationalized banks, State Bank of India, which is the 20th bank, and the 5 associate banks together. There were 27 public sector banks in the PSU category. The 2 other public sector banks which make up the 27 are the IDBI Bank, which was established by a special act of Parliament called the IDBI Act of 2000, and the Bharatiya Mahila Bank, which was established in the year 2013, and since then it has been merged with the State Bank of India. So these 27 public sector banks are also called the nationalized banks. 19 of them were nationalized in 1969. Then we have the State Bank of India. Then we have the 5 associate banks which were merged with State Bank of India on the 1st of April 2017. Then we have IDBI Bank, and then we have the Bharatiya Mahila Bank, which was started in the year 2013, but then since got merged with SBI on the 1st of April 2017. So together, these form the public sector banks in the country. Now, what are the 19 public sector banks? The 19 public sector banks which were nationalized on the 19th of July 1969 are the following: Indian Bank with its headquarters in Chennai, Indian Overseas Bank, which also has its headquarters in Chennai, Vijaya Bank and Canara Bank, which have their headquarters in Bangalore, Corporation Bank, which has its headquarters in Mangalore, Andhra Bank, which has its headquarters in Hyderabad, and Bank of Baroda, Bank of Maharashtra, and Central Bank of India. All of them have their head offices in Mumbai. Continuing with the public sector banks list, we have the Punjab and Sindh Bank, which is also headquartered in Delhi, Punjab National Bank, which is headquartered in Delhi, UCO Bank, which is headquartered in Calcutta, or Kolkata as it is called now, Union Bank of India, Allahabad Bank, Dena Bank, all of which are headquartered in Mumbai. Oriental Bank of Commerce is headquartered in Delhi, Bank of India, which is headquartered in Mumbai again, and the United Bank of India, which is also headquartered in Kolkata. So these are the 19 public sector banks which were nationalized on the 19th of July 1969, and in which the government holds a majority stake, or in other words, the government holds more than 51% of the share capital. Now coming to the next category of banks, they are the private sector banks. Obviously, as the name nomenclature indicates, public sector banks are those in which the government holds a majority share, and private sector banks are those in which the majority of the share capital is held by the public. It could be, when I say public, it could mean a group of individuals or a group of institutions or a group of bodies coming together to form the bank, and that is called the private sector bank. Each of these private sector banks which are currently in operation are promoted by a set of promoters. The promoters could either be individuals, or it could be a group of individuals, or it could be institutions which have promoted these banks. There are two sets of private sector banks. One is the old generation private sector bank, and the second is the new generation private sector banks. Why are these called old generation and new generation? Simply because some of them were started very, very long ago. Some of the private sector banks are in fact more than 75 years old. A case in point is Dhanlakshmi Bank, which has its headquarters in Thrissur in Kerala, is more than 75 years old. And similarly, Catholic Syrian Bank, which is also headquartered in Thrissur in Kerala, is again more than 75 years old. There are Karur Vaishya Bank, which is headquartered in Karur in Tamil Nadu, has completed its centenary year. So these banks are all started much long ago. They have been around for decades and decades, and hence they are called the old generation private sector banks. The new generation private sector banks all came into existence in the last couple of decades ago maybe, and they are the ones which are currently functioning with a high level of technology, with a high level of cross-selling of products, and with a high level of core banking solutions. We will learn what is core banking solutions in the videos to come, but just keep it in your mind that these banks have a lot of importance on core banking solutions right from the day one. New generation banks, as I told you, are of recent origin and have grown substantially. This is a point to be remembered, because the new generation banks, although they started very late, have grown substantially in terms of assets, in terms of liabilities, in terms of revenue, in terms of profit, in terms of number of branches, everything. So for example, a bank like HDFC Bank, which is not more than 20 years old, has almost reached a level where many other private sector banks are envious of HDFC Bank, simply because of the way they have grown. They have grown in size, they have grown in multiples of rupees in terms of deposits and advances. So these new generation banks have grown substantially, and the new generation banks, they place very high emphasis on technology. The thing about new generation banks is that they are technologically driven right from the day one, where many of the public sector banks were struggling to cope up with mechanization. Mechanization in the Indian public sector banks was introduced as far back as 1984, met with a lot of resistance from the unions of that time, especially in certain communist ruled states like West Bengal and Kerala. There was a big hue and cry about mechanization, and so the government of India had no other go but to go slow on the mechanization in public sector banks. But slowly but steadily, the government was able to convince these unions and tell them that mechanization is the way going forward. So a second time around in 1996, another committee headed by Dr. C. Rangarajan, the former governor of Reserve Bank of India, was formed to go into this aspect of bank mechanization, and the committee told in no uncertain terms that mechanization is the future of commercial banking in India. That is the story of public sector banks. But the private sector banks giant leaped all the public sector banks from day one in terms of mechanization. They had a lot of capital because, for example, HDFC Bank is sponsored by HDFC Limited, which is perhaps the largest housing finance company in India. and ICICI Bank is funded by ICICI Limited, which again has got very deep pockets. So because of the high capital which they have, the private sector banks were able to start mechanizing from day one. In fact, on the day the branch was opened, they opened with computers and they opened with all the digitalization that one could think of. The private sector banks went many steps ahead of their public sector counterparts, to the extent that whenever you opened an account with the private sector bank, you were given a checkbook and an ATM card on the same day. And in a matter of a week, you got a personalized checkbook also with your name printed on that. That is the extent of technology these private sector banks have been using, and they have really leapfrogged their public sector bank counterparts by many times over. Private sector banks, especially the new generation private sector banks, also cross-sell a variety of products. When we talk of banking, and we go back to the definition of Banking Regulation Act, which says that Section 5B says that acceptance of money for the purpose of lending or otherwise deposits of money repayable on demand and withdrawable by check, cash, draft or otherwise. This is the definition of banking as given by the Banking Regulation Act. But times have changed, and so have the banks. Today, banks cross-sell a variety of products, and it is not true to say that banks are doing only deposits and advances anymore. They sell mutual funds, they sell insurance policies, they sell two-wheeler and car-wheeler insurance, they sell life insurance, and they sell whatever they can lay their hands on, as long as it gets revenue for the banks. And this phenomenon of cross-selling was started in India by the private sector banks of the newer generation variety. What are the old private sector banks which are in operation? You have Karur Vysya Bank, which is headquartered in Karur in Tamil Nadu. You have Tamil Nadu Mercantile Bank, which is headquarters in Tuticorin in Tamil Nadu. You have Lakshmi Vilas Bank, which had its headquarters in Karur but recently shifted their headquarters to Chennai. You have South Indian Bank and Federal Bank, along with Catholic Syrian Bank, all of which are based out of Thrissur. Thrissur in Kerala is a banking hub. Because right from the olden days time, South Indian Bank, Catholic Syrian Bank and Dhanlakshmi Bank, all these three banks have been in existence. They are all based out of Thrissur. Federal Bank is a very big private sector bank in Kerala, started with its headquartered in Alvai, but later on shifted their headquarters to Cochin. And they are today a very big name in the private sector bank. They have got their own insurance company as well, and they are doing very well, Federal Bank. And then you have Jammu and Kashmir Bank with its headquarters in Srinagar, Karnataka Bank, which is headquarters in Mangaluru, along with the public sector bank, Corporation Bank. So Corporation Bank and Karnataka Bank are based in Mangalore. City Union Bank, which was earlier called Kumbakonam City Union Bank, is headquartered in Kumbakonam in Tamil Nadu. These are the old generation private sector banks. The advantage of the old generation private sector banks is that they have been around for a very long time, and they have strong regional presence and loyal customers. When I say strong regional presence, a bank like Tamil Nadu Mercantile Bank, for example, which is based out of Tuticorin, has a very strong presence in Tamil Nadu. Not that it does not have branches outside Tamil Nadu, but it has got a very strong presence in the state of Tamil Nadu. Similarly, Karnataka Bank, which is based out of Mangalore in Karnataka, has got a very strong presence in the state of Karnataka. Not to say that they don't have branches outside. In fact, one of their biggest branches of the bank, of Karnataka Bank, is based in Chennai. So to that extent, the old private sector banks have a very strong regional presence and very loyal customers. You could find any number of people who are banking with any of these old generation private sector banks. They will never ever come out of those banks. A loyal customer of Dhanlakshmi Bank remains with Dhanlakshmi Bank forever. So that is their major hallmark of the old generation private sector banks. The new trend in the old generation private sector banks is that they are also embracing on technology in a long way these days, in a major way these days. For example, you have Federal Bank, which has invested thousands of crores of rupees on technology, and is now all the branches of Federal Bank are well connected through their internal network, to the extent that they have their own ATMs, they have their own core banking solution products, and many of these old generation private sector banks are not lagging behind in the investment of technology, in the investment on technology these days. These banks also have started to behave in much the same way as the new generation private sector bank when it comes to embracing technology. And of course, like their new generation counterparts, the old generation private sector banks also have begun cross-selling of products. And as I told you, Federal Bank has got its own insurance company along with IDBI. So to that extent, they are embracing on newer avenues of business, which is not necessarily directly related to the definition of banking as given in the Banking Regulation Act. What are the new generation private sector banks in operation? These 8 banks which are now in existence in the private sector space are all new generation in the sense that they were started maybe less than 20 years ago. But each of them has become a mammoth one in size already. These banks are the HDFC Bank, the ICICI Bank, Kotak Mahindra Bank, S Bank, IndusInd Bank, and Axis Bank, all of which are headquartered out of Mumbai, the financial capital of India. Then Bandhan Bank, which was formerly an NGO, has now got a bank license. Their headquarters is in Calcutta. And IDFC Bank, again, which was called the IDFC Limited, has now become an IDFC Bank. So all these are the new generation private sector banks. If you look into the history of new generation private sector banks, they were started hardly 20 years ago. But today, virtually everyone on the street has an account with any one of these banks. Any one of these banks, simply because of the comfort which they give and the convenience which they give to the people banking with them. HDFC Bank gives you all the services that you can imagine. They give you an ATM, they give you a locker, they give you insurance policies, they sell mutual funds, they do whatnot, they give you housing loans, they do everything and anything. So to that extent, these new generation banks have taken the imagination of people to a different level altogether and are competing with each other when it comes to serving the people. Now, we were talking of the State Bank of India and its 5 associate banks. The State Bank Group consists of the State Bank of India, or consisted of, I should say, because today we are already past the 1st of April 2017 deadline. So the State Bank Group consisted of the State Bank of India, State Bank of Mysore, State Bank of Patiala, State Bank of Bikaner and Jaipur, State Bank of Hyderabad, and the State Bank of Travancore. The State Bank Group was known for its integration all the time, although cultural differences existed amongst the various banks of the State Bank Group. On the 1st of April 2017, history was made in Indian banking industry when the 5 associate banks of State Bank were merged with the State Bank of India on the 1st of April. Together, the combined entity has something like 17,000 branches and over 75 crore accounts. The new entity, State Bank of India, as it is called now, will be the 4th largest in terms of branches and amongst the top 50 in terms of assets. In my earlier video on the merger of associate banks with State Bank of India, I had opined that it's a matter of great shame that India, with its vast population and a multi-trillion-dollar economy, did not have a company which was amongst the top 50 in the world in terms of banking. But today we have one. State Bank of India has leapfrogged into the top 50 in terms of banking, in terms of the banking industry by assets, and in terms of number of branches, SBI, with its thousands of branches, now has become the 4th largest in the world in terms of the number of branches. And in terms of employees, as after the merger of the associate banks with the employees, State Bank of India has got 207,000 employees. It's a mammoth bank indeed as of now. In 2016, the Government of India took a very radical step in announcing the establishment of small finance banks. These banks were meant to reach the last mile and give the last mile connectivity to the millions of rural population who were denied access to banking services in the country. Most of these banks were promoted by NGOs operating in different states, and some of them have since started operations. The Equitas Bank, which was promoted by the Equitas Microfinance Limited, one of the largest in the country and having their headquarters in Chennai, has commenced operations already. Similarly, the ESAF Small Finance Bank, promoted by the large microfinance company ESAF Microfinance with its headquarters in Thrissur in Kerala, has already commenced operations. The Capital Small Finance Bank, the Coastal Area Local Bank, the Krishna Bhima Samruddhi Bank, they are all yet to start operations in the country. And the Ujjivan Small Finance Bank, based out of Bengaluru, has started operations with 6 branches in their command as of now, and in the very near future they plan to open 12 branches across the state of Karnataka in the remote areas of the state. Public sector banks, the private sector banks, the old and new generation private sector banks, we have talked of the small finance banks, and now it's time we turned our attention on the next category of banks which are operating in the country, and that is the foreign banks. A total of 43 foreign banks from 26 countries operate in India. A foreign bank is one which is headquartered in a country other than India. It's a very obvious definition. A foreign bank is one which is headquartered in a country which is outside India. Talking of foreign banks, Standard Chartered Bank has the largest number of branches in India with 81 branches. It is also the oldest amongst the foreign banks to start operations in India. Standard Chartered Bank has already crossed 100 years of service to Indians, and the first branch of Standard Chartered Bank was established way back in the 20th century. Today, it has 81 branches across the length and breadth of the country, and it is the largest foreign bank which is in operation in the country. The Hong Kong and Shanghai Banking Corporation, HSBC, has got 45 branches spread again across the length and the breadth of the country. They are present in all the port cities like Mumbai, Kolkata, Chennai, Visakhapatnam, Cochin, and so on. They started their operations with the port cities and later on expanded to the interior parts of the country. So HSBC has got 45 branches. Citibank, which is perhaps the most popular of the foreign banks, has 39 branches in the country. Citibank became very popular because of its very aggressive methods of marketing credit cards in the country, and the most popular credit card at one time in India was the Citibank credit card. So Citibank has got 39 branches in the country. When compared to Standard Chartered Bank, it is less than half the size of Standard Chartered Bank in India. So that completes the video on the scenario of banking in India as it exists today. I hope you like the video. I'll see you again in a video very soon. Until then, thanks for watching.